Hi guys, so I wanted to talk about the price action of the last few trading days, so Thursday, Friday and today. Um, so last week price ended very bullish, and also price created a very nice dealing range. It took sell side liquidity, it took the buy side liquidity here. It created therefore this bullish dealing range, and that was last Friday. And we talked about this part. High was taken, closed back in the range, therefore this low became liquidity. So that happened. Also what happened was today, interesting. But first let's measure this dealing range and then notice where the equal lows are. They are at equilibrium right here. You can see this 50% mark of this whole range, this whole bullish dealing range. So they were taken today during London. So London was the manipulation session, and they tapping into this bullish order block right here. So if we just take this low and extend this low to the left, we can see that it respected this down close candles. Maybe it's more visible here. Yeah, so here it was more respect of the maybe this inversion fair value gap. Look at the bodies, perfect. Yeah, so this inversion fair value gap was used to push price higher again and to take those equal lows out. So then price used that to rebalance, to take inefficiencies, to take liquidity, sorry, and then just displaces again. Look at this displacement candle, it's huge. So it took all these equal lows and then price reverted and took out Asia high right here. And notice all these big wicks and the bodies. The bodies and the big wicks, the bodies are at the same level as a big wick. So this means that this right here is a rejection block, strong rejection block, big wicks, multiple rejection blocks actually. So price takes out Asia high, but closes it back in the range. Which range? This range. This was the range high to this range low. So this range was now taken, and price closed back in this range. So that means that if it takes out this high, the draw becomes the low that created this high. So that means this high takes out that one, and it is this low that created this high. So therefore price will, I'm sorry, the draw becomes this low. And as you can see, price is going down in a very high resistance manner. So that's not very nice to trade, but price is going down. Of course, this is just a bias. It is not a fact that price will definitely go here and take out this low, but usually it does take out this low. But there still is 1 hour fair value gap sitting in the way. So overall, price is still bullish, and if you zoom out a little bit, we can see the price is now, yeah, what do you say? It is, it's high resistance. It's not going anywhere. It's a little bit of sideways. Maybe it's distributing after for taking out these highs, but still, I think if you look at the daily, you can see there's some very big displacement. There's a high up here. You could see there's equal highs up there. So price might pause a bit, maybe retrace a bit back into one of these value gaps, and then trade higher to take out these highs. So longer term, I'm still bullish. Maybe short term, we can expect a consolidation or a retracement before going longs again. Yeah, so were there some entries today? Yeah, I think so there were. Let's see. Of course, you could already draw out this inversion fair value gap, um, and also on the 15-minute during London, we just went straight to this fair value gap, and I think when I go a little bit lower, we can see a nice swing fractal. Yeah. So price, obviously the lows at the 50% level was the main liquidity that was taken by this huge move down. Then price made a 3 drive, 1 going up, 2 going down, going up, going down, 3 drive into a high time frame PD array, and here is a fair value gap that was taken out by this candle, and at the same time this bullish fair value gap was created. So here you could have used Model X. This was the candle that closes the fair value gap, then another order block was created, and then price traded above. So this could be an entry right here. Yeah, stop loss wherever you want, and target. I think Asia high would have been a nice target. Also, what you have is, and that's what I always like to see, is you have a short-term low, intermediate-term low, and lowest short-term low, which makes this institutional market structure. So yeah, I think this is a very good entry. It is in line with the high time frame, which is bullish. So yeah, that would definitely be a trade. And like I said earlier, when we go back to the 15, once we take out Asia high, right here, price closes back in the range. So let's see how that looks on the lower time frames. All that is happening during lunchtime, I see. This area is lunch. We take it out, we close back in the range. So if you would have waited for two CSDs, well, this is the high that took out the liquidity, so therefore I'm going down and look for the low that was responsible for creating that high. And for me, it is this low actually. This is looks like an important low, tapping in the fair value gap, and from there price takes out the liquidity. So, but then there was this huge candle. I don't know what it was. It was at 3 minutes past 7. So yeah, I think this is not tradable. But again, it touches the fair value gap, the 1 hour fair value gap, and brings price high again. But notice how this bullish candles were still holding here and here. Look at that, never even with a midline. Okay, and as you can see, this order block was holding just a wick above, and the bodies were staying in the lower half of this order block, and then price just goes down and goes down in a high resistance manner. So I think this was a very good trading opportunity. You can see here body just slightly below the 50% level of the fair value gap, but this is a 3 minute, so on a higher time frame this is I think more a wick. You can see it good on the 15 minutes. Body are closing in the upper half of the fair value gap, so that is a good bullish sign, and I think therefore this would be a nice trade. So that's it for today, and thanks you, and speak to you next time.